We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Jim Forsythe. He's a former New Hampshire State Senator, U.S. Air Force pilot, and gold and silver bug. Thanks for joining me today, Jim.
Thanks for having me on. And I'll say I'm a longtime listener, first-time caller.
Excellent. So I'd like to start with a little bit of your background and how you came to your political views. You describe yourself as being a small L libertarian. So what led you to developing that viewpoint?
So in high school, I actually studied Russian. I went to this boarding school and I said, that sounds interesting. So I took Russian, both in high school and in college. And as part of that, I took a trip to the Soviet Union, 1984, and then again in 1986. And just that experience and seeing what the lack of freedom looked like in people's eyes really hit me hard. And then I took a lot of Soviet studies courses and history courses. And so I grew to understand, what a danger communism was. And the reverse of that, why free markets are so powerful and good for people. And so that motivated me to join the Air Force. And I like to say I did such a good job that within 2 weeks of joining, the wall came down and the Soviet Union fell. So I served in the Air Force. I was a KC-135 pilot, flew for Bosnia, Somalia, and Iraq. Yeah, how could I forget that one? And so I spent about 12 years in the service. I wound up teaching the Air Force Academy. But, my experience in the military made me realize that, really the bigger issues facing our country are internal, plus the experience in the Soviet Union and seeing them collapse. And so I left the military service and started working private industry, and then was making good money. And then in 2007, I met Ron Paul. And, so all these times I had these very libertarian viewpoints. I met Ron Paul and said, oh my goodness, I got to help this guy. And so a small group of us started his campaign before there was a campaign. We had street signs. And that's where I first learned about the monetary aspect. I already understood the liberty aspect and socialism versus free markets. But with the creation of the Fed, every transaction, half of that transaction is $1. So the Fed was essentially manipulating 50% of every transaction we make. Artificial interest rates, causing people to borrow than they should be. And so I helped his campaign. He endorsed me for running for Congress. The timing wasn't quite right for that. I started to run, but then 2 years later, I ran for state Senate, got elected. I like to think I did a lot of good there. Got school choice education tax credits passed, 11% reduction in the budget, the highest they have done in 100 years. Not that I did that; it was a team of us. Passed medical marijuana. I was the prime sponsor of that. And then when Ron Paul ran again in 2012, I jumped on that. And now that I was a state senator, having my endorsement was helpful in that case. And then he invited me on to be his campaign chair. So I got to go interview him in town hall meetings and then go around with him all over the place. And great guy. Also went door to door with his son, Rand Paul, which is a great experience. And he's one of us, I would say. And so that's where I got my first introduction, and then in the understanding of the monetary policy. And at the same time, because of my beliefs and deeper understanding, I started investing in gold and silver mining stocks. I was pretty much all in 2007. Thankfully, I was all in at 2007, not 2011. But unfortunately, I was such a firm believer that I stood by my investments all the way through. And after 2012, I just stopped looking at them saying, nothing's going on right now. Everybody seems to have regained their faith in the dollar. I still know it's the right trade. I'll just let it sit there and wait. And I stopped looking. And then in 2016, when it perked up again, I basically wiped out my portfolio and kind of started over, and was pleased to see Kirkland Lake and Evolution Mining had done very well despite the bear market. So that really saved my portfolio. So that's pretty much kind of my investing in political history up until the recent kickoff of Silver Squeeze. But I basically started getting heavily back involved with the gold and silver mining space in 2016.
Interesting. So, Jim, having the perspective that you do of being a former state senator is part of the problem that most other senators don't understand how the Fed or their currency works?
I'm not sure. There's one problem could be that they don't understand. The worst problem would be that they do understand.
True.
And Rand Paul will continuously bring up audit the Fed, and they can just shove it in the desk. Unlike New Hampshire, where every bill has to get voted on, it always leaves committee. It has to get voted on in committee. Full chamber always votes on it. And in the U.S. Congress, if a committee chair doesn't want a bill to see the light of day, they can shove it in a desk, and it never does. Mm-hmm. And so there's certainly very powerful people at Works I'm sure do understand and block efforts. And a good example of that is Judy Shelton, who had a deep understanding of the gold standard and was supportive, was nominated to be on the Federal Reserve. Mm-hmm. And Lindsey Graham, Senator Collins, and Mitt Romney broke party ranks and voted against her. And in fact, Lindsey Graham gave a fist bump to Kamala Harris. So there is unfortunately a bipartisanship when it comes to supporting the status quo of, the people in power, including the Federal Reserve.
Mm-hmm. So, Jim, what are some of the most important parts of the macro picture at the moment that inform your decisions to be in this space right now?
So for the macro picture, I have learned, I thought I had a good understanding in 07 and 08. And, but this time around, Larry Lepard, who's a great follow on Twitter, a personal friend, suggested I subscribe to Forest for the Trees from Luke Gromman. And for the normal subscription, it's not expensive. Anybody that wants a deep understanding of the macro should get that and definitely follow him. But this is a 100-year sovereign debt supercycle. Ray Dalio talks about that. If you look at interest or the bond market, it's been in a 40-year bull market. They raised rates really high. Volcker raised rates really high to stop inflation, and now ever since then, whenever there's any hint of a recession, they'll lower rates, and then they try to raise it back up again, but never get it quite high, and they just keep lowering and lowering, and now we've hit that zero bound. Mm-hmm. So that's one kind of tipping point where they can't lower rates anymore. And then the other one is the debt to GDP ratio. And this is what I got wrong in 07 and 08 is they could pretend that they were going to be able to raise rates and normalize. Whereas now with debt to GDP, something like 150%, and we have to deficit spend to pay Social Security entitlements and defense budgets. So there's no way to reduce that debt to GDP through tightening spending. And so that's also reached a tipping point, and that also is why they can't raise rates. And the solution after World War II with similar levels of debt was to have yield curve control, to print more money, let inflation run hot, and cap yields. And Luke Grumman talks about that, says that's what's coming, and I agree. So he's saying about -5 to -10% real rates on treasuries. And if you think about that, retirees, pensions, all these bondholders in real terms are going to get wiped out. And gold and silver normally don't have any yield, but compared to a -5 to -10%, I expect we'll see a stampede from things like treasuries into gold and silver. So the macro picture to me looks it's a once in a lifetime opportunity, in my opinion. Not only opportunity, but a once in a lifetime, crisis that will come where gold and silver will be your protection, and paper assets are going to be chasing after real assets.
So, Jim, how do you view the disconnect from the Constitution of having an unbacked fiat currency, and what, in your opinion, is the way in which this situation can be resolved?
So, the Constitution says only gold and silver. Only states may only make gold and silver legal tender, and it's like so many other constitutional issues. Is how do they get away with it? They do. I mean, interstate commerce clause. There's any number of things that they ignore. I imagine the technicality that they use is it says no state shall make gold and silver legal tender. Well, this is a private Federal Reserve Bank. It's not a state, so they can do it. And it was a slippery slope to get here. In 1913, during a time when there was a lot of people on, it's Christmas holidays, a lot of people weren't in Congress. They snuck in the Federal Reserve Act, and it was something no one was calling for it other than the big banks, because people were saving their money. They weren't borrowing because they were getting more and more prosperous. Gold held its value, productivity was increasing, so you could buy more and more things with your gold and silver. And so created the Federal Reserve Act, artificially lowered interest rates to encourage people to borrow, which then led to the Roaring '20s with over leverage happening. And then when that bust, that led to the Great Depression. And it's been a nonstop boom bust cycle ever since then, which, Austrian economists talk about is what happens when you do artificial interest rates.
So something you've brought up in the past, Jim, is that the State Department confirmed that the gold futures market was created for price suppression. So can you tell us more about this report and what the motivations were?
Yeah, so it was actually a memo. If you just Google State Department gold future memo, gold futures market, you'll see it. And again, this is something I got from Luke Groman. A lot of people debate about the manipulation of the futures market. Are they purposely keeping down, et cetera? But this memo says, and this was after we went off the gold standard in the 70s, is, a futures market will get created. By the very nature of a futures market, it will have far more future contracts traded than the underlying asset. And because it's leveraged, I'm paraphrasing, because it's leveraged, it will introduce a lot of volatility, and these things combined will serve to keep people from hoarding gold and silver. And it's funny, on Twitter and all the 50-day moving average is doing this and blah, blah, blah. And so I'm going to hold off, wait for a correction to buy in. Oh, I'm going to sell. I think it's going down. And it's exactly what's happened is all this volatility, which is very unnatural for something as deeply liquid as gold and silver. It'd be like the dollar going down 10% in a day. It just is very unnatural, and it serves to keep people scared and out of the markets. And that's the encouraging thing about silver squeeze is it's not working anymore. These guys are buying and holding physical. They're buying, PSLV, holding it. Every time the price gets smashed, they're cheering and saying, great, we can buy more.
Silver's on sale.
Yeah, silver's on sale. Thank you very much.
Yeah.
Because normally when they smash, retail gets out, and the big banks like JP Morgan's been able to do over the years have been able to scoop up this valuable asset at a cheap price because the retail is scared away from it. That's changing now, and retail is starting to understand this and use those price smashes to accumulate.
So why do you see silver as such an important asset for you to own? What are the market dynamics as you see it that make this such an asymmetric bet?
So, that's the interesting thing about silver is you can come at it from a number of different viewpoints. As a commodity, it's completely necessary for electrification, for move to electric vehicles, clean energy, you name it. So there's a huge demand for it. At the same time, because the historically low prices that we've had in silver, mining output, there's a big gap. And so there's a supply deficit. Now, because of the creation of the futures market, and in my opinion, whether conscious or not, a suppression of the silver price over the years, that's helped lead to this supply deficit. The miners are barely making any money. They were barely making any money at $15, $60 silver. They were losing money at $14. So for the same reason that the price has been low, also is a good reason why there's huge upside. When the value's unlocked. But then, so that's on the, okay, let's treat it like a commodity side. There's huge upside there. But then the other upside is on the investment demand side. We see these massive paper printing. There, huge counterparty risk of debt, loan collapses like we had in 2008. Well, silver and gold have historically been viewed as money for thousands of years, and they have no counterparty risk if held physically. And there's going to be huge demand for that. I mean, and we saw, just a single post onto Wall Street Bets, which triggered massive buying and cleaned out the physical markets over the weekend. I mean, and that's just getting started, in my opinion. So you add the commodity side, and then you add the increased monetary demand, the upside could be pretty spectacular.
Mm-hmm. So what do you feel the ultimate goal of the silver squeeze is?
I think that depends on who you talk to. For some people, it's a trade. It's undervalued commodity. One part of it is kind of break the futures market's control of the price and by that hugely leverage aspect of it and regain real price discovery, which real price discovery would have a much higher silver price. So that's one goal. But what kind of started as a trade for a lot of people, for me, it's been a movement since 2007, but what started as a trade is also becoming a movement as well to say, our monetary system is in deep trouble. Mm-hmm. Let's awaken as many people to that as we can so they can protect themselves by holding gold, silver, and then later gold. And in terms of if for the people that are on that side or will be educated to become on that side, silver was the target because it's more deeply undervalued than gold. The gold silver ratio hit 120. It's down to 68, but mining output's closer to 10 to 1. It's a much smaller market than gold. So we can have a bigger impact. There's a bigger upside right off the bat. And then once silver has real price discovery and the gold silver ratio gets down further to more historical norms, then a lot of us will be selling some of that silver and diversifying into gold.
Do you have a kind of a target in mind for when you would make that switch, Jim?
Not when, but for me personally, gold has lower volatility traditionally. Mm-hmm. So even if the gold silver ratio is where you think it should be, it makes sense to hold the gold because if there's going to be downside, it's going to be more stable. So I'm thinking around 30 to 1 that I would start. I still have gold and I certainly have a lot of gold miners, but around 30 to 1, I'd start moving over. If it got to like 5 to 1, mm-hmm. that would be where I'm going to sell all my silver and put it into gold or something.
Mm-hmm. So you've talked about splitting the silver squeeze into two parts. What are they and how do you go about thinking about this?
So I hinted at what I just talked about, but the two parts would be, the trade, which is, buy something undervalued and the manipulation of markets and get real price discovery and, make some profits off of that. But then a lot of people are also looking at this as a movement where silver is money, gold is money. It's historically been treated like that. And, having spent time in politics, I am not willing to hold out hopes that, people in power will voluntarily adopt a gold or silver standard. Mm-hmm. especially when they're not even willing to let one reasonable person onto the Federal Reserve Board. And if they were to adopt a gold and silver standard, governments, I wouldn't trust them to maintain that. People have lots of debates over how much they trust an ETF. Well, I trust the government even less than that. So I'm a big advocate of gold and silver were chosen as money by people, not by governments. It was when someone was trading one person for this, another person for that, but they wanted something from this person, but that person didn't want what they had. So it was like you'd have to have three-way trade. Well, gold was a common denominator. Everybody valued it. It was small, compact, fungible. You could divide it up into smaller quantities. And so gold became money by the people. It's only recently that the government got in the middle of that, mainly through the creation of the Federal Reserve, and totally messed it up. So I'm not waiting for the government to choose gold and silver as money. I advocate that people do that themselves by getting the physical. If you need it to barter, I've tipped people with silver coins. Always starts a great conversation. I highly recommend it because it takes about 30 seconds to explain. They're like, silver? Why silver? It's like, well, because of money printing. They go, oh, yeah, you're right. Where can I get more?
That's a lucky tippy.
Yeah. Well, these guys, we had a tornado and a crew came in and they worked for like 12 hours straight climbing up trees. And I don't hold cash and I wanted to give them something. So I went down to the safe and got an ounce of silver for them each.
Awesome. So Jim, you've been posting a lot about the difference between SLV and PSLV. So why is this difference so important to you? And isn't the old adage if you don't hold it, you don't own it, important to remember here?
It is. So there's a lot of debate between people that say everything you have should be physical. Don't trust anybody. Well, my issue with that is, people know who I am. They know I'm a gold and silver investor. So, and I'm 10 years from retirement. I want to hold that much physical gold and silver in my house? I definitely don't. So that's where something like an ETF come in. And also, tight bid ask spreads. If you need to go spend some of your gold or silver, you're going to get, less than you paid for it if you turn around 1 week from now and try to sell it. Whereas the ETFs have a tight bid ask spread, so they're more liquid. So I think there's a role to play for physical. There's a role to play for ETFs, but there is, beauty of gold and silver, it has no counterparty risk. When you buy an ETF, you are adding counterparty risk. You are giving up the one most valuable thing about that commodity or that money in order to have it protected in a vault. So you really need to make sure that you trust that counterparty. And so there's, lots of debates over SLV versus PSLV. A lot of speculation. We don't know if SLV has issues or not. But even if they were totally trustworthy, I'd still prefer PSLV because SLV is huge, and that's in the hand of a single custodian, a huge large bank that's has relationships with the Federal Reserve, has profited off of those relationships, and it's too close to a monopoly for my taste, no matter how much I trusted them. So for that reason, I'd still prefer PSLV for that reason, because if silver and gold become our money again, whoever's managing that ETF has control of our money, essentially. So I don't know if that answers your questions. I don't want to wade too much into speculation on SLV holdings. A big distinction between the two, though, is SLV is an open-ended fund. Shares in silver are added on a daily basis to try to track the spot price, whereas PSLV is a closed-end fund, except they do have a prospectus amendment that allows them to periodically issue new shares and add silver based on market demand. So you'll see days where, we went months without adding a silver, and there was no outflows of silver in PSLV. And then once silver squeeze kicked off, the premium to the net asset value for PSLV spiked up. And in response, they issued shares and started adding more silver. And you can see it on the charts every day where the premiums just keep climbing straight up. And then they'll add silver in the morning. It'll drop. The premiums will drop, and then it'll climb right back up again. So you see the demand there. The thing that comforts me about that is, if they can't source the silver, it'll be, it's a closed-end fund. If they can't add more silver to it, it'll start trading at a premium, just like the coin dealers or the coins are currently trading at a premium.
So, of course, you and I are speaking here on Tuesday, February 16th in the afternoon, and this is basically the first real trading day after the prospectus change in SLV. So what is the importance of that, Jim?
Well, it's a lot of discussion over the weekend about that prospectus change. So for those that don't know, it's basically SLV prospectus was changed to say that they might not be able to get silver, in which case silver wouldn't be added, new shares wouldn't be issued. So in other words, it would become a closed-end fund. What's interesting, a couple things interesting about that is they did not announce this. It was some people doing research on SLV were reading through the prospectus and they go, wait, I don't remember this being in there. And they looked at two different dates and figured out it had been added. And as a shareholder, I'd be a bit frustrated about that, about a change to the prospectus without any sort of announcement. Now, if you look at the flows, when the silver squeeze kicked off, they had massive inflows. And I can't remember the number, but in 2 days, it was like, if you look at the charts, SLV holdings will grow. They've been steady for like 6-7 months. And this spike was a 2-day spike that was bigger than the entire move in July.
Mm-hmm.
Or
I
as
believe
big,
that was at the end of January,
2 days.
wasn't it?
Yeah, it was 28th, 29th, February 1st, around that time. My guess is that there was a gamma squeeze. When the silver squeeze got posted on Wall Street Bets, a lot of those guys are into options and had a successful gamma squeeze on GameStop, because GameStop, the shorts weren't covering for a long time. Most of that run up was a gamma squeeze from the options. So that's my guess, but there was a coup in Wall Street Bets. Mods were replaced with people brand new. And then all of a sudden the silver squeeze post got deleted. Everything relating to silver got deleted. And so the people in Wall Street Bets that like silver, they were known as silver surfers, they left and started up WallStreetSilver, which I immediately pretty quickly became a member of, and I highly recommend. A great group of people and rapidly growing. Mm-hmm. They very quickly understood, no, we're not going after the futures market. We're not going after options. In order for this to work, and also for your own benefit, is buy physical or products that are trustworthy and linked to physical, and buy physical. And then JP Morgan came out with the downgraded forecast for silver after that big spike up in holdings. I don't know if it's related, but then they increased the margins on the futures market by 18%. Mm-hmm. And silver spiked massively down the next day, and SLV had outflows. And they've continued to have outflows ever since. Mm-hmm. I haven't checked today's data yet, but as of this weekend, it was 8 days in a row with outflows of SLV. So then JP Morgan turns around and upgrades their forecast again. Yes, we're in a commodity super cycle and everything's great. So my guess is that inflow was a little bit too big for them. I do think they have silver. I think they probably have more silver than what was in SLV. The question is did they really have enough silver to support those inflows? If so, was any of it leased or not leased? I don't know. But their actions make it a little interesting in the prospectus change. And what I would keep an eye out for is when that day comes where they announce they can't source the silver, what will their silver holdings be at that point? Will it be below the peak that we had end of January? If that makes sense. So if they say they can't get it, 2 weeks from now, they say they can't get enough to add, but yet they had 50 million more ounces, 2 weeks ago. Well, why can't they add it? They added it then.
Something I'd like to kind of go back to here, Jim, is you were talking about if these ETFs can't get the silver that they need. Can you just go over again what could happen if they can't get that silver that they need to add to their funds?
Well, so for PSLV, it would be business as normal. It's a closed-end fund generally, and then because of that prospectus, they can do periodic additions of shares in silver, but only if they can get it. And there's some mechanics involved in there actually that when I first read two sides of this, I was a little scared, and then it dawned on me. It's people are like, well, how can they move it that quickly? Well, if you look at the way the inflows have gone to PSLV, there was a huge spike, and then near the end they started to trickle off, and now they're ramping back up again. Well, the prospectus says 90% of their net asset value has to be in the vault, vaulted silver. 10% can be in cash or silver outside the vault. Then the prospectus that allows them to add shares say they may sell and issue shares and get cash. It doesn't say they get silver, they get cash. That cash then can be used to buy silver. So that 10% of cash and silver outside the vaults is their that gives them flexibility to go buy silver somewhere, and it's outside the vaults, but at any given time 90% has to be in the vaults. So they can add 10%, which is about what they did in the first week. But at that point, that at the money offer also says you have to obey the rules of the prospectus. So at that point, they can't issue more shares. They can't buy more silver until they get some of that silver back into the vault. And so I think that's why, despite kind of nonstop demand for PSLV, there were some days where it traded at a 1% premium, and they only added like 500,000 ounces or 200,000 ounces. Well, then starting middle of last week, that ramped back up to 1 million ounces, 1.4 million ounces. And I'm curious what it is today, because the volume today was larger than it has been since that first spike. The volume was huge today.
Yeah, I believe that the volume was almost 10 times what it normally is. And that was like halfway through the day, right?
Yeah, that sounds about right. I've been tracking like a moving average of the volume, and it's about 7 or 8 times or 6 times what it was before all this. But today's volume, was, it takes a while for it to hit the EMA, but today's volume was super high.
So as we're talking about really kind of trying to back these funds with physical silver and gold, what is the importance of the upcoming Basel III regulations for the banks, and what could this move be foreshadowing for us?
Yeah, so Basel III, the rules are changing, where for these big banks, central banks, that only allocated gold is counted as 100% reserve asset. In other words, in the past, there was some percentage where if you held gold, maybe you got 50, I don't know what the numbers are, but you got 50% of the credit on that on your balance sheet, whereas now it's going to become 100%. But that 100% is only if it's allocated gold. You can't have unallocated gold with multiple claims on it. That won't be valued at 100%. So, and Andrew McGuire is a great guy to listen to this stuff on. He's really knowledgeable about this. And so, in my opinion, what's happening is there's kind of this scramble to square the books and get ready for oncoming Basel III, and LBAMA has tried to fight it and delay it. But, some of these unallocated gold positions, they're trying to unwind them. that does create some selling pressure because you're selling something, even though it's, you may have 3 claims to the same ounce of gold, you got to close 2 of those contracts. So you're in essence selling them. But I think the central banks and the big banks have been using this time as a time to accumulate, and silver squeeze kind of kicked off the understanding of this, and now retailers are starting to accumulate rather than just the big guys. And so I think there's a lot of speculation about a kind of a price reset happening prior to June. Once everybody's done, once all the big guys are done accumulating, then they'll allow it to go up. It'll be interesting to see silver squeeze, I think. And the central banks don't hold silver, but there's a lot of people that trade the gold to silver ratio. There's a lot of people that say, well, I can't, gold's too expensive for me now, but I need a monetary asset, so I'll get silver. And so they do kind of put pressure on each other. As silver price rises, it tends to put some upward pressure on the gold price. And likewise for Basel III, it is going to make allocated gold more valuable in essence to banks. That puts upward pressure on gold, which will also put upward pressure on silver.
So is the banks maybe, trying to stack some physical metal? Is that maybe foreshadowing that we could be moving to a physical backed digital currency? I know you've spoken about Zcash before. Is there something like that that you kind of see in your opinion that is going to be backed by physical metal like this?
Well, first, in terms of the big banks accumulating, yeah. So the work on Basel III started years ago, and central banks on a whole have been buyers of gold for numerous years now. Again, something that Luke Groman talks about. Especially China and Russia have been accumulating gold. In China, we have no idea how much they have because they're one of the world's largest gold producers, but gold doesn't leave China. Mm-hmm. So there's a lot of speculation they have quite a bit. And I saw recently a news article about Putin announcing that they've ended the dependency on the dollar, essentially. So yeah, there's a lot of move, definitely by countries. Now the question is will any country make a gold-backed currency? I don't think so, because then they couldn't deficit spend. China seems to be going down the route of essentially having gold backing for their currency, but at an indirect free floating rate. And again, this is from Luke Groman, but so they will, buy oil from Russia in yuan or euros. Russia can use yuan to buy goods from China, and whatever's left over, they can go to the Shanghai Gold Exchange, which is heavily settled for physical. Most of their contracts wind up being settled for physical, unlike COMEX. Mm-hmm. And so in this essence, what they have is they're backing yuan with gold, but at a free floating rate. So in terms of a crypto backed, so Zcash, it's not something I know much about, but somebody on Twitter pointed it out, which would be a cryptocurrency by JP Morgan, backed by silver is my understanding. Again, it ties back to I don't want a big bank controlling our money supply, and I certainly don't want holding crypto with somebody like that, or with a big bank. So I've said for years that, I think that gold and silver-backed crypto will be the way out of this, since the governments either will not do the right thing or they'll do the right thing and mess it up again. I really want people to choose to use gold and silver again. And in the 21st century, something like crypto backing is the way to do that, rather than the paper. Paper money got started by you deposit your gold in the bank for safety, and they issue an IOU, and that became the paper currency. Mm-hmm. Well, crypto is the modern day equivalent of that. And so I think it's a natural evolution, and it's something people can do without waiting on the government. And the system that I've been using since December and really excited about is the Kinesis monetary system. And it's more than just gold-backed crypto, they have a whole yield engine. So the fees go into a fee pool, and the fees are 0.45%. Those go into a fee pool, and that basically gets paid back to the holders or the people that add gold and silver to the system, physical gold and silver to the system, or people that do referrals, or people that were early investors. And then some of the fee pool goes to pay insurance, vaulting cost, and so forth. So it's kind of, I think of it as a really big member-owned credit union where it's hard currency backed. And I love having, I had a whole bunch of KAG, which is silver, in my account. And I could, I'd go to a convenience store, sell a little silver, put it onto my debit card, and then go in there using Apple Pay and pay for, a few groceries. So your exposure to fiat can be completely minimized with a system like that.
Interesting. So how does Gresham's law apply to your thinking around Kinesis?
Well, so that's something they talk about, is trying to reverse Gresham's law. So for those that don't know, Gresham's law is that bad money drives out good. So, if paper currencies start to fail, the tendency is you hoard the gold and silver and you spend your dollars. And now the government's printing dollars kind of exponentially. You toss Gresham's law in there where you start to get that first hint of inflation and people go, oh my goodness, and they start spending their dollars to get rid of them. That's where inflation can kind of really spike heavily and become parabolic. And so that's Gresham's law. So Kinesis, the claim is they're trying to reverse Gresham's law. And at first I said, that's kind of a gimmicky thing to say, and I don't quite get it. And I started using it. And then recently, as Silver Squeeze got kicked off, they have an offer where whenever you mint, you wind up getting a perpetual yield from the coin, from the gold and silver you add to the vaults. And right now, those yields are triple for a short amount of time. Plus, you get one of these kind of investment shares, KVTs. And next thing you know, I'm like minting like crazy. And so I've, with the help of others, 6,000 ounces of silver minted, put into the vaults at Kinesis, and then I get a yield as people use those. And that's Gresham's law, right? As you say, I have an incentive to, let's say I was physical holding gold and silver. I have incentive to take that gold and silver, put it on deposit, and earn a 5% yield off of its use. Or I have an incentive to pay a little bit of money to mint, some tokens by putting a physical into the vault, and then I get a yield off of the transaction fees for that. So that's where it's trying to reverse Gresham's law, is incentivizing you to use the system. Because I'd always been excited about gold-backed crypto, but every time I went to look at it, I was like, well, okay, so I'm going to get a gold token. It's going to track the price of gold. Well, I have gold sitting on my shelf, so why would I add that risk to it? Well, in this case, you're adding a little bit of counterparty risk, depending on how much you trust the system, but you're obtaining liquidity, vault storage at no cost because of the fee structure, and potentially yields from saving and or minting. So
perfect. Awesome, Jim. Well, do you have any concluding thoughts as we wrap up here?
Just make a big plug for Reddit's WallStreetSilver. Like I said, it's a mixed group now. People that came over from Wall Street Bets, but also people have joined them from FinTwit. They welcome people of all ages, Gen X, Boomers, Millennials, and it's been really neat to see some young people come over from Wall Street Bets who were kind of in that GameStop trade because they felt like they wanted to stick it to the guys that have been hurting us. But in my opinion, that was small potatoes, and they come over to WallStreetSilver and start getting an education and realize, oh my goodness, this is the big battle here against 100 years of the Federal Reserve price suppression of the precious metals markets, and a potential collapse in the dollar. And it's so it's really neat to see this mixed age group coming together, and just highly encourage folks to check out WallStreetSilver on Reddit.
Excellent. And where can our listeners find more of your stuff too?
So I am at Jim Forsythe 5 on Twitter, so you can follow me there. And then I am Forsythe JR 2 on Reddit. So that's like chop my last 2 letters of my name off and put a JR.
Excellent. We'll have links to both of those in the show notes as well.
Great.
Jim, thanks very much for your time today.
Thanks for having me.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.